Good morning, and welcome to today's webinar, Introduction to Experience Rating. I'm Rob Oates, Chairman of the II-ABCAL Emerging Leaders Committee. With us today is Rod Libby of the California Workers' Compensation Insurance Rating Bureau. Rod has over 30 years of experience at the WCIRB and has a broad knowledge of the workers' comp rating system. He has been the manager of the WCIRB Policy Examination Department, the Classification, the Test Audit Department, and the Rating and Statistical Department. Rod has a high level of expertise in the application of the Experience Rating Plan and the Unit Statistical Reporting Plan. For today's webinar, we have muted your phones to eliminate the background noise. You can still ask questions through the webinar in writing through the toolbar on the Go to Meetings. Questions will be addressed at the end of the presentation. Rod, take it away, please, sir.
Thank you, and good morning. So what we want to do in this short webinar is to provide instruction to kind of an experience rating, including an overview of the purpose of the program, the principal concepts, how ownership plays a part in the calculation, how an experience modification impacts the final premium, and changes to the California Experience Rating Plan effective 2015 that limit the impact of a single claim on an employer's experience modification. Finally, we will review the experience rating worksheet and share some frequently asked questions. So experience rating is a state-mandated merit rating program codified within the California Insurance Code. The specific rules and guidelines are contained within the California Workers' Compensation Experience Rating Plan 1995. The overarching purpose of experience rating is to benchmark an employer against others in its industry, thereby providing a uniform mechanism to ensure the pricing of workers' compensation insurance to account for the unique nature of each employer's operations and provide a direct financial incentive to reduce workplace accidents. When talking about benchmarking an employer against others in its industry, we're defining industry as a standard classification or classifications assigned to the employer's business operations. A listing of the standard classifications can be found in the California Uniform Statistical Reporting Plan. While these classifications define homogeneous industries, the range of activities considered normal and usual for a classification may be broad. The business practices of the individual employers that comprise an industry may be quite diverse, with differences in the way operations are undertaken due to the level of mechanization or automation, the percentage of raw materials purchased versus fabricated, safety practices, the loss prevention programs instituted by the business, and differences in wages paid to employees. Experience rating refines the pricing of workers' compensation insurance to account for the unique nature of each employer's operations. Experience rating uses past experience to forecast or predict future losses. An increase in an experience modification is not intended to collect additional premium to make up for or to pay for claims that were filed in past years. It is not about trying to recoup expenses. Rather, it's used an individual employer's loss history as a predictor of what is expected in the future. An employer that is experience rated will have an experience modification which is expressed as a percentage. An experience modification below 100% reflects better loss experience than the industry average, while an experience modification over 100% reflects worse than the industry average. For example, a credit modification of 90% reflects experience better than the industry average, while a debit modification of 120% reflects experience worse than the industry average. A 100% experience modification reflects experience exactly the same as the industry average. Let's review the core concept of experience rating. The experience rating system distributes the cost of workers' compensation insurance equitably among employers in an industry classification. For example, if there's 2 employers in the industry for classification 4444, mini widget maker, and each develops $100,000 in pure premium, the total pure premium of the industry is $200,000. If employer A has a favorable loss experience compared to employer B, then employer B's experience modification would increase to offset the decrease in employer A's, so that the industry modified pure premium remains the same before and after the application of the experience modification. Experience rating is a net neutral program. Since experience rating is about comparing the industry average, if there are employers that have a credit experience modification, there must be employers with debit experience modifications to create a net neutral result. Businesses with majority common ownership are considered a single employer with a loss history of all their businesses combined for experience rating. Even if the businesses are different, operate from different locations, and have separate policies, they will share the same experience modification. The resulting experience modification will be the blended experience reflecting all operations. The experience modification is applied to the premium, thereby increasing or decreasing the billed premium. In this example, the 125% experience modification results in a 25% premium increase, which is $23,586 more than the premium prior to the application of the experience modification. Just over 87% of the state workers' compensation premiums are subject to experience rating. This, however, only represents 20% of the California employers. Most employers are so small that their loss experience is not considered predictive, and therefore they're not eligible for experience rating. The California Experience Rating Plan has been amended effective January 1st, 2015 to provide that if a single claim occurred during the policies used in the experience modification calculation, an employer's experience modification is to be limited to no more than 25 percentage points above the experience modification that would have been published if the employer had been loss-free. If the values of the single loss are small enough that the experience modification calculation using these values is less than this 25% limitation, the lower unlimited experience modification would apply. So let's give an example. Let's say that the loss-free rating is 80%. So the limited experience modification would be 20 percentage points higher for 105%. If the experience modification calculation using the small single loss values results in a 95% experience modification, which is below the limited experience modification of 105%, the 95% experience modification applies. This 25% limitation in the experience modification does not apply if 2 or more claims are used in the calculation, or if the experience modification calculation excludes audited payroll due to the employer's failure to cooperate with an audit. So let me again restate. So if there's 2 or more claims that are used in the calculation of the experience modification, this limitation will not be used regardless of the value of those claims, or if unaudited payroll falls within the calculation of that experience modification due to the employer's failure to cooperate, that experience modification will not be limited even though there may be a single claim that is used in that experience modification calculation. To denote that an experience modification is limited, the experience rating form will include an L next to the experience modification to identify it as an unlimited experience modification. For reference, the experience rating form will also contain the experience modification that would have been effective if the limitation had not been applied, as well as the loss-free rating. This diagram provides an example of how this will be reflected in the worksheet. As you can see, the 103% experience modification is denoted as being limited based upon this new rule. In Area B, the 124% experience modification that would have been effective if the limitation had not been applied is also displayed. As with the pre-2015 experience modification, the loss-free rating reflecting the experience modification that would have been applied if there were no losses is displayed in Area C. This loss-free rating of 78% is the basis on which the 25% limitation is applied to arrive at the 103% limited experience modification. This is an example of a workers' compensation experience rating form. This form includes the payroll and losses reported by policy and how these values are used in the experience modification calculation. This example is an example, again, of a limited experience modification. So again, you will see the limitation reflected in the lower right-hand corner down in the calculation. You will also see the limitation reflected in the upper right-hand corner where the 103% experience modification is reflected. So let's review a few frequently asked questions. I have two businesses. Will they have separate experience modifications? The answer is no. Businesses with majority common ownership are combined for payroll and losses for experience rating. Each business may have a separate policy, but they will have the same experience modification. Another question could be, I had no losses during this last year, the same as the preceding year. Why did my experience modification go up? The experience rating system distributes the cost of workers' compensation insurance across all employers before and after the calculation of the experience modification. If others in your industry have less losses overall, then your experience modification may increase. Again, in this instance, what's happening is the industry as a whole is becoming safer. So the fact that you may have no losses, we were expecting, or again, the industry is having less losses, and so your calculation or your experience modification may end up an increase, although what would appear that your experience hasn't really changed. There's another question. Can I get a copy of my experience rating worksheet? Again, referenced in one of the previous slides. Insurers can request a copy of the rate sheet from the customer service department at the WCIRB. Agents and brokers can submit a policyholder product order form to the WCIRB, accompanied by either a letter of authorization information form or a special power of attorney form, both available at WCIRB.com. Policyholders can request a copy through their insurer or complete the policyholder experience rating worksheet request form online at WCIRB.com. So let's summarize what we have learned. Experience rating is a state-mandated merit rating system that benchmarks an employer against others in its industry. The combined experience of all business operations that share majority ownership will be blended to produce a single experience modification. Experience rating equitably redistributes the cost of workers' compensation insurance among the members of the industry. Experience rating provides a direct financial incentive for employers to invest in effective loss control programs that reduce workplace injuries. Experience rating plan and other resources about experience rating, including education on demand learning modules, are available at the WCIRB website. So this webinar provided an overview of experience rating, distributing the cost of workers' compensation insurance, ownership considerations, impact on final premium, limited experience modifications effective 2015, the experience rating worksheet, and a few frequently asked questions. I want to thank you, and again, for attending this presentation today.
Hey, thank you, Rod, very much. Very informative, and definitely loved the slide on explaining the new 25%, where they're going to show you the loss-free year, then what the loss would be if the 25% cap wasn't in, and then what it is now. I think that's great, and I think the Work Comp Rating Bureau deserves a lot of credit for the updating of the experience modification worksheet, where they divide each year into segments, so it's a lot easier to read than it was in the past. So you guys should be commended for that. I'd now like to open up the webinar for any questions you may have. If you haven't already done so, please submit your questions in writing in the toolbar section of GoToMeetings. We did have the first question with regard to dual wages and some of the changes in the dual wages, and I know we talked about it briefly, Rod, before we came on the webinar, but can you maybe just go over again how the WCIRB comes up with the dual wages?
Sure. What we do is periodically, on a scheduled basis, we have our field representatives actually visit various contractors throughout the state of California, and we gather wage survey information based upon number of employees that are earning particular wage amounts by the industry category that we're happen to be surveying. And then we accumulate that data and we provide it to our actuaries, who then use the actual loss history associated with those contractors that we have surveyed. And they start doing their actuarial analysis to determine whether or not there needs to be changes in the dual wage threshold, again, to arrive at the kind of experience that we expect to receive in the various categories of high wage and low wage.
Okay, great, great. The next question has to do with the 25% cap, and I hope I'm saying that right. With regards to the 25% cap, if the insured had one claim in a prior year and no claims this year, well, it would be last year, coming on to the mod, would that 25% cap still remain?
So the 25% limitation takes a look at all of the policies that are utilized in the calculation of that particular experience modification. So this isn't about, well, I had one more claim than I had last year, and therefore I want to limit the impact of that one more claim to 25%. It's really about, I went from being loss-free, potentially the prior year, and this is the first year that I had a loss, or, again, instances where all I have is a single loss used through all of the various policies that may fall within the calculation of the experience modification. So again, experience modifications are using a 3-year period of time, but as we all know, there may be many instances where you have more than 3 policies that are used in that calculation. So again, this applies to all policy experience that is used in the calculation of that experience modification. You can't have any more than one claim.
Gotcha. Great. Thank you. Another question and kind of a comment, and maybe you can just provide some additional commentary on it. The WCIRB has been updating their website, and you guys have come out with I think it's called STAR, where brokers and agents can obtain this information much more easily. Can you maybe provide some commentary or a little overview of what you guys have done and how the WCIRB is making it much easier for the brokers of record on clients to obtain this information?
Sure. We have initiated or undertaken an initiative that was many years in the planning and testing to kind of really change the core of the information system that the WCIRB uses to process unit statistical data and to produce experience modifications. We went from a mainframe database to a relational database, and that provided a lot of advantages both to the WCIRB as well as to the insurer community, and we have also been able then to open up and provide additional information to the broker community as well. So our plan was to make these various applications and working with us easier and more user-friendly, and providing more direct access where people can have the ability through proper authorization to be able to see inspection reports and to be able to see experience rating worksheets and provide that to the broker community, again, once they're appropriately authorized to see those kinds of products that hopefully will help them in either marketing the product or helping the policyholder or assisting in the proper underwriting of the workers' compensation policy. So we are by no sense of the word done with the various enhancements, and again, we look forward to continuing to have outreach in the broker community to identify things that would be of value and see whether or not we can incorporate those kinds of good tools and help guides to assist in the proper underwriting and processing of workers' compensation policies.
Well, thank you. We did get several more questions, which is great, and everyone can still, we still have time. You can enter them on the right-hand side of the GoToMeeting. This question asks, I have an insured who did not complete a final audit for the 2011 term. Their current XMOD worksheet is showing a loss-free rating at 83%. Can you please explain how to do the actual math? The new XMOD is 127, and 127%, and I want to verify the 25%.
Well,
I know that's a little difficult.
I'm not sure I completely understood the question, but let me try to I guess put things in my own words, and hopefully I address the concern. So, for instance, let's say that I'm producing a 2015 experience modification, and so 2015 is going to use policy years 2013, 2012, and 2011. During the 2011 policy term, for whatever reason, that audit did not get conducted, and the employer was notified that there was no audit that was done, and we produced an experience modification in 2014 that did not use any of the payroll, but we used the losses. Now when we get to 2015, even if the employer only had one claim, if we still do not have an audit for that 2011 policy year, that experience modification will not be subject to this 25% limitation. So again, even though the loss, that one loss that came in 2013, which is brand new, so they used to be loss-free, 2013 I've got a single loss, we will not limit that experience modification to 25% above the loss-free because, again, during that period of time that we were using policies, one of those policies was not audited due to the employer's failure to cooperate with an audit.
Got you. Thank you, sir.
I hope that answered it.
I think it did, and I think it would help if I could ask the question properly as well. We've got a couple more, and we'll see if hopefully I can ask them a little bit more effectively. The 25% limitation on the experience modification, does that apply to one claim per year or one claim in the 3 years of the calculation?
That limitation is one claim during the 3-year calculation. So what will happen on your experience rating form? So when you look at the experience rating form down in the bottom where you've got kind of having your totals, you're going to have only one where it has number of claims. So if you've got any more than one in the number of claims, then you have exceeded the number that would result in a limitation.
Perfect, perfect. With regards to specific industries, is there any place to review changes in XMONs based on industry segments? Like to see if in a specific roofing, for instance, is the industry, are the mods tending more negatively or credit or debit?
Well, again, one of the principles of experience rating is I'm going to take this industry and I am going to reallocate and have experience modifications that are going to be reflective of whatever that industry average is. So you may end up and have rates that may significantly change, but you shouldn't have experience modifications that significantly change. So again, all I'm really trying to do is slice the pie up into different portions, but the pie is still going to be the same. So if you've got, there's going to continue to be average expected losses for this industry. And so you're going to take a look at each individual employer and you're going to compare this employer to what's average for the industry. So if the industry average claims are going up, your mod may end up and stay exactly the same, even though you're also seeing that you have higher claims. So again, it's always going to be a comparison to the industry. It's not going to be, well, everybody in the roofing industry has a higher experience modification because our experience is getting worse. It's just going to be that whatever the average may be higher for the industry as a whole.
Gotcha. Gotcha. Do you need a minimum payroll in order to be experience rated, and what is this requirement?
Yeah, the qualification for experience rating. Actually, we've got a module, and I do encourage the participants to take a look at the various modules that we have on WCIRB.com. For the qualification isn't based upon payroll per se. It's based upon a multiplication of payroll times the pure premium rate that's associated with that particular classification. So you take the amount of payroll that was earned during the experience period and you multiply that times the pure premium rate, and you're going to come up with a pure premium total. And so then the qualification for experience rating is tied to that pure premium total.
Perfect. Perfect. And then we've got another question. Regarding the limited experience modification, it is my understanding that it would apply regardless of the amount of the incurred loss for that one claim. Is this correct?
We will limit the impact to no more than 25%. As I tried to demonstrate in one of the examples, the fact that I've got one loss doesn't mean that my mod is going to be 25% higher than the loss-free rating. So what the rule says is you can't go any higher than that. So even if you would have some kind of catastrophe claim that would be hundreds of thousands of dollars, the answer is yes, your experience modification cannot go up any higher than 25% of what the loss-free rating is. That's the maximum that it could go up effective 2015.
Great. Great. Well, I don't see that we have any additional questions. So I want to thank Rod for spending time with us today and providing us with his insight. This concludes our 4 workers' compensation webinars in advance of InsureFest 2014. To listen to the recorded version of the previous Workers' Comp webinars, please visit www.insurefest.org and click on the Workers' Compensation track link. Finally, we want to invite you to come and see Bill Mudge, President and CEO of the WCIRB, at InsureFest 2014 on November 6th through the 8th, where Bill will be a keynote speaker at the Sheridan Fisherman's Wharf. Bill will speak on becoming a customer-centric organization. For more information and to register for InsureFest 2014, please visit our website at www.insurefest.org. That concludes today's webinar. Thank you all for participating.